This is a practical update for what's going on with Uber right now and the market. We've been in bear market for a while. I explained some things about it in a previous video. This is S&P 500, the market, where I wanted to measure roughly what is the drops, what are these legs. It's down 23-24% from the top, but in the beginning, during the bull market, the reactions were at 3%, 5%, 6%, something like this, small ones. Once the market reversed, it started going 12%, 10, 12, 11, and this one is 12. So even though the market only went down 20-something%, but it actually had double-digit drops already 5 times in a row during a relatively short period of time. And some of the metrics from the screenshots that I send you, some of the metrics are already record-breaking. So Uber. The last time we discussed Uber in a previous video, there was literally nothing to hook up into except this large big drop produced severe oversold condition. Rarely seen severe oversold condition. I'm gonna show where. I want to make it larger. Okay. And it happened right in here. This drop, the huge volume, the gap, the complete destruction of LYFT, the sister stock, produced this condition that I was kind of expecting, you know, when it's oversold, from here, it will come out and go up. Yeah, that didn't happen. Sometimes oversold condition is being relieved by a sideways correction, like we had in here. Like we had in here, it's kind of like a box, yeah, small box, and the buy order was at 25.25. It triggered right here. This is our trade. This is already half a position bought. Then the stock promptly turned around, fell about 20%. And if this was a trade, something where you want to, you know, capitalize on short-term movements up and down, catch the top and the bottom and the turns, then the trade taken over here at 25, right here, would have to be stopped out when it breaks the bottom of the box. You just lose some 15% and go home. This is not a trade in a conventional sense. This is an investment. I expect to hold Uber for a very long time. I'm buying half a position here, fully knowing that this may not be the low, but this is the first indication of any constructive price action at all. Then, obviously, this thing is falling for quite a while, and at the end of the fall, there's got to be some kind of a high volume, like in here, high volume, like in here. This was earnings, and this is earnings again, but then through the earnings the stock was falling. LYFT came out with pre-announcements, and Uber moved up its date of earnings up. So this was a major mess, and now we're making lower low and the volume is picking up again. Theoretically, for the stock that's been in a bear market for a while to bottom, you need a big down day with a big volume, capitulation style, like here. Big down day with big volume, like right here. Yeah. So we don't have it yet. And a big drop, I have some targets based on my other work. And this is a weekly chart going back to the IPO. the all-important 38 area, I would say, or level, has been finally chewed in the February, and in the spring we tried it, and didn't take. So this is, this area remains somewhere up ahead. It's very important, and we will have to deal with it when we rally from the bottom, wherever it may be. Now, everything under 25 is the gift, because 25s was the low. Hold on, let me do this so I can do this. 25 was the low when they cashed out the previous owner. And then whatever happened during the coronavirus was mostly a panic. Under 25, everything is a gift, in my opinion. Because the price has never been significantly lower for any meaningful amount of time. We don't have any more support. We don't have any more area of interest. We cannot draw any horizontal lines. I do have a target based on other tools around $15. I have a target around $15 right here. The 1540, 1480, it's very imprecise. Also, half the time it doesn't work. So this is somewhere near the lows that were hit during the coronavirus. The panic lows. That's definitely a panic. And we had, like, on a weekly chart, we can see there was some kind of a panic here. This was earnings. So the downside volume is definitely picking up. The move into 1415 will be huge. If we can buy it somewhere there, or somewhere on the way, I think it's the last reasonable point. I do have some other targets, they're like in single digits, $7, $8, $4. So it can really go down and down and down. I want to show something. How does it go down? When you annotate the chart, if you click on the letter, it will give you also percentage change. So you can draw percentage changes from the top. It fell on the first leg 30%, 28, almost 30, 28, 40%. And then 40%, and then from here, that's already like almost 50% drop. Maybe it came to here at 40%, and now we start another one. Another 40 will take us to 15. So this is where my measures end. And beyond that, I don't have any clue as to what's going to happen. There are definitely no signs of turnaround. The feeble rally that we have did not have any follow-through. It ticked the buy order at 25.25, stayed up for 2 days and collapsed in spectacular fashion. So the idea was to buy the first position in halves on a panic down. We're doing it right now. And then wait for the second position to buy that one in two halves. Sometime when the bottom will be already made, above 50-day moving average, but, above 15-day moving average. Let's say we bought at 25 and we'll be lucky to buy another one at 15. Yeah, 25 plus 15 is 40. So the cost basis will be about 20. From 20, for this thing to double, all it has to do is like go back into that 38 area, which is a strong resistance now. It was support, now it's resistance. We're going to have to work through it somehow. And if we blow through it, we will come back to it again. I think it's that important. We're going to be living in this 38 overhead cloud for quite a while. But this particular buy can double and give you a free trade even before the bull market starts. Just on the bottom, you can already work something out. The Uber is a crazy volatile stock, much more volatile than S&P 500. S&P 500 moves in 10 to 12% clips. That thing moves in 30 to 40% clips. Okay? Now, there is a sister stock to Uber, and this is very important. There is a sister stock to Uber, which is called LYFT. And the situation here is somewhat worse. It's already below the coronavirus lows. And outside of this spectacular rally at the end of 2020, LYFT is generally a weaker stock than Uber. If you look at two similar stocks, very similar in the same industry, the same chart pattern, which one do you pick for your investments? You can build a ratio. You can write Uber divided, semicolon, by LYFT in stock charts. And then click update, and it will give you a ratio of Uber to LYFT. If ratio is rising, that means Uber is outperforming. If ratio is falling, that means Uber is underperforming. And right now the ratio is at some of the highest levels ever. The LYFT is definitely underperforming Uber. There is a leak. I think there is a leak of investors that had their investments split into two or wanted to play a pair trade. I did it myself personally, and I'm not doing it again right now. For now, I'm not doing it. LYFT is much smaller company. LYFT is profitable. LYFT's got very impressive fundamentals because they can show profit, so the fundamentals count. In Uber, here, let me show you. In Uber, we don't have any profits, so it's very hard to judge the fundamentals of the company. But I'm gonna come back to this as soon as it loads. You can look at it even in a different way. You can put Uber, comma, LYFT, comma, and S&P 500, so we can compare it to market, separated by commas with no spaces, and then change the sharp chart to performance chart feature, and click go. Okay. So the right side of it is not going to be seen. Hold on a second. Do it like this. Where was it? Here. There you go. So this is all three stocks. S&P is green, Uber is red, and LYFT is blue, plotted on the same chart on a percentage scale. So you can see that since September of last year, let's say LYFT is down 70%, and Uber is down only 50, and S&P is down less than 20 since the September, because it's a performance chart, and on the bottom you see 200 days and a slider. You can click and drag and see all of the price history. And the S&P since 2019, when does it start? May of 2019. The S&P is still up, and these two, well, the sharing economy is having some problems, the car sharing economy, I would say. And but by changing the period and the starting point, you can find that point of time when LYFT was outperforming. See, during this period of time, LYFT went up 140%. So since October of 2020 to the spring of 2021, LYFT went like a rocket, 120%. Uber went up by 70%, and S&P somewhere bumping around the bottom. So performance changes over time. It's not constant. You can roll the slider and you can see how the fortunes change, and S&P 500 is up and these two suckers are down. Then fundamentals, Uber. Right now, Uber is selling for 2 times the sales. Price to sales is 2. The stock is no longer overvalued, although it shows loss, but this is an accounting gimmick. And some of the metrics of the growth are off the charts. LYFT is the same. It goes down some more. Now it's not a 40 billion company. And it's gonna be 30 billion company. You know, the market cap keeps on coming down and down. It's a smaller and smaller company. And Warren Buffett should just come and buy it. You know, very soon it's gonna be cheaper than Twitter. Is Uber more important than Twitter? Or Twitter more important than Uber? There is another one. In sharing economy, there is Airbnb, which you have personal experience with and can have an opinion. And let me change it to weekly chart. Airbnb also has not been around for too long. It came public in December of 2020 with a spectacular rally of some 100% right off the IPO. Okay, so this is a successful IPO, for sure. Yeah, let's change it to 3 years and draw some crayons on it. I think I'm out of time though. Support is somewhere above 130, let's say 131ish, yeah? All right, so it came here in the spring and summer of 2021, again in the winter of 22, and now it broke it. So Airbnb is broken. And the targets here are just not even practical. They're like in 40s and 50s. But this is also sharing economy. This is a much larger company. It's bigger than Uber and Lyft combined. Airbnb. That's your rentals. This is what you want to get involved with. You can look at more or less the fortunes of this company, read about it. ABNB, you can put it into the same Finviz. ABNB, yeah. And 60 billion company, crazy PE, price to sales almost 10, growing fantastically, just growth numbers are through the roof. Well, they all have very small short ratios, but people short them through other means nowadays. So 800 million profit on the books, and cash, and 6 billion in sales. What does Uber do? 21 billion in sales. So I think this is something to watch. Also, sometimes in the future we will see the bottom made here. I don't have high conviction on Airbnb like I do on Uber. I think Uber can be $1,000 stock sometime in 20, 30, 40, 50, 60, I don't know when, but it could be like, you know, my opinion about Uber. I cannot say the same about Airbnb, but it's definitely something to watch. It's a very strong stock. And if you compare it to Uber and Lyft and S&P and Airbnb, this is also sharing economy. So these are loosely connected stocks. You can see the green line is S&P 500. You can see that the rest of them are making the same wiggles. But as you roll it back, you will see that Airbnb is in the sky while everything else is bumping around the bottom. It has been a very strong stock all this time for, you know, well, depends on where you start, of course. Hold on a second. Let me see what I did here. This is where it was very strong. See the spectacular rally of 60% in the beginning of 2021. And I think it did it again, once again. Yeah, and it did it once again in October. In October of October, November, and then in the beginning of winter of 21. See, this is like beautiful, much higher than everything else. And then it collapsed with everything. And out of 3 sharing stocks, sharing economy stocks, Lyft, Uber, Airbnb, today it's stronger, you know, or at least as good as Uber. At least as good as Uber, or maybe even stronger. But definitely not Lyft. So the efforts in the sharing economy needs to be concentrated on Airbnb and Uber for accumulation. And find me another stock that you like. Let me know. Put it in the comments. Send me a text. We need something else for the sharing economy. And the next time, I'm going to do this exercise with online retailers. I can also do this exercise with hotels, rental REITs, and other real estate, and look inside the market, and maybe it will help you in your own real estate speculations sometime soon. Have a nice day.